SWIFT is slow, USDC is fast. SWIFT requires trust, USDC runs on code. But what happens when that code is controlled by a private company, backed by a superpower, and linked to every transaction you make? Imagine a world where all your money moves instantly, globally, at the speed of light. No banks, no delays, no friction. Sounds amazing, right? But behind that promise of speed and convenience lies a fundamental trade-off: control. In this video, we explore why USDC and its issuer, Circle, could reshape the financial system. Not just economically, but politically. And why that might be even more dangerous than SWIFT ever. What is SWIFT really? Contrary to what many think, SWIFT doesn't move money, it just sends messages. It's a global communication network that tells banks what to do. Bank A sends a SWIFT message to Bank B saying, "Please credit this account." Then Bank B manually executes the order. It can take days. Each step has costs, intermediaries, and checkpoints. But that slowness brings with it a kind of safety. SWIFT is operated by a consortium of thousands of financial institutions. No single country owns it. Even the US government, while influential, cannot unilaterally control it. In fact, SWIFT has resisted pressure before, such as when it hesitated to cut off Russian banks. It's outdated, inefficient, and expensive. But it's also decentralized, and that matters more than people realize. What is USDC? USDC, or USD coin, is a stable coin. It's pegged 1-to-1 to the US dollar, meaning 1 USDC equals 1 USD. But unlike the dollar in your wallet, USDC lives on the blockchain. It's issued by Circle, a US-based fintech company regulated under American law. With USDC, money moves globally within seconds, 24/7, even on holidays. No need for a bank account. All you need is a digital wallet. Circle holds the equivalent USD in reserve, typically in US Treasury assets. That means every time someone uses USDC, they're actually strengthening demand for US debt and the dollar itself. From a technical perspective, it's a brilliant innovation. From a geopolitical perspective, it's a strategic superweapon. Centralized control, a kill switch on your wallet, where things get serious. Unlike Bitcoin or Ethereum, which are decentralized and censorship resistant, USDC is fully centralized. Circle has the power to freeze, block, or destroy USDC tokens in any wallet. They've done it before. In July 2020, Circle froze $100,000 worth of USDC at the request of law enforcement. The smart contract that governs USDC includes a blacklist function. It takes just one command, one click, and your money is frozen, gone from circulation. Not stolen, just stuck forever. This kind of power doesn't belong in a democratic society yet. We're handing it to a private company with global reach. SWIFT delays versus USDC deletion. SWIFT is slow, annoyingly slow. But that slowness has unexpected benefits. It creates friction. It gives you time to reverse fraud, investigate errors, or appeal sanctions. With USDC, everything happens instantly. That's great when you're sending money to a friend. But what if you're wrongly flagged as suspicious? There is no phone number to call, no way to appeal. Once Circle blacklists your wallet, your money is frozen on chain, in real time, permanently. In this system, speed replaces justice, and that's a dangerous trait. Surveillance capitalism meets financial. USDC transactions are public. Every time you send, receive, or hold USDC, it's recorded on a blockchain ledger for anyone to see. Governments and corporations can track your purchases, donations, subscriptions, and behavior patterns. This isn't theory, it's already happening. Blockchain analytics firms like Chainalysis and Elliptic help governments monitor wallet activity. Combine this with AI, facial recognition, and behavioral prediction, and you've got the ultimate surveillance infrastructure. Digital freedom dies not with a bang, but with an upgrade. Banks are flawed, but at least they're human institutions. You can talk to someone, file a complaint, go to court. With Circle, there's none of that. USDC operates through code. You don't get to speak to a manager. You interact with a smart contract. If your account is frozen, there is no hotline. If you're wrongfully flagged, good luck finding a lawyer who can sue an algorithm. You're not a client. You're a user of a product that doesn't have customer service. This is finance without faces. Justice without judges. Just pure code, precision. Guided financial warfare with SWIFT. Countries are blocked. With USDC, individuals are a journalist receiving donations. Blocked. A protester buying supplies. Flagged. A whistleblower moving funds abroad. Frozen. This isn't just possible. It's already happening. We're moving from financial inclusion to financial compliance. If you don't fit the algorithmic mold, you become a threat. And threats get blacklisted. What happens when the tools of financial empowerment become tools of digital persecution? Stablecoin or soft prison? Yes, USDC is fast. Yes, it reduces fees. Yes, it's technically impressive. But these benefits come at a cost. You're trading freedom for convenience, privacy for programmability, friction for finality. Money becomes obedient. Every transaction can be paused, redirected, or denied. Not because of fraud, but because of policy, or politics, or a line of code you didn't write. This is not just a new currency, it's a new ideology of money. Programmable, trackable, and punishable. Final warning, who holds the kill switch? SWIFT was a relic of the past, but it was neutral. USDC is a vision of the future, but it is obedient. It answers to the issuer, the regulator, and ultimately, the geopolitical agenda behind the system. It will make economies faster, but it may make societies less free. And in the end, the question isn't whether USDC is better than SWIFT. The question is, what happens when money no longer belongs to people, but to platforms? Who holds the off switch? And when they use it, who decides why?